Welcome to Pete's Property Podcast, brought to you by Buyers and hosted by Pete Wargent, buyer's agent, finance and real estate expert, and all-round property guru, plus published author. Join Pete for 30 minutes as he chats all things property with a new guest each week. Learn practical tips from the movers and shakers in the property industry and well-known personalities sharing their property journeys.
G'day, welcome to this week's episode of the Pete Wargent Property Pod. I'm delighted to welcome back onto the show our resident property expert, Alastair Lias. Al, welcome. It's great to have you back on.
Hello, Pete, and it's great to be back on. Thanks for asking me back. We've got some pretty diverse subjects to talk about today, so I'm excited.
Yeah, I thought it would be useful to have a catch-up because more than anyone, you see what's going on at the coalface in terms of what buyers are planning to do next, what people are doing with their mortgages, where investors are looking to buy and so on. And I guess things have been changing pretty quickly over the past year or two. So I figured who better to get on to give us an update of what's happening around the traps, really. So I guess taking it from the top then, what sort of trends are you seeing at the coalface? And then we can have a look around the ground, so to speak.
Yeah, it's interesting. But look, being the first person people speak to when they inquire with us here at Buyers, obviously that we do see a lot of different inquiry coming in, and it does change over time depending on what the market's actually doing. It's the sort of inquiry that's actually coming in at the time, which is always interesting, and it's always a bit of a challenge because you need to be flexible, you need to adapt very, very quickly as well. You know, and when we were sort of doing this time last year, a lot of it was about speed and getting things done quickly. And a lot of people out there that were a little bit too hesitant or weren't quite ready to make a managed decision. You know, a lot of the time the pressure was on them. So we took some of that pressure off them. And we'll look at now when things have slowed up a little bit this year. Before the federal election, things really did slow down. So a lot of people, they just took that back seat and they thought we'll ride this one out as they tend to do during elections. But certainly the last few weeks, Pete, I've seen that there's definitely been a rise in people that have come to us. And I think they sort of understand now where the interest rates are going. They're more comfortable with that. They're factoring those sorts of things into their plans. There's certainly some caution out there, no doubt about that. And that's really where we're at the moment. I think that certainly seen an uplift in inquiry and it's a little bit more cautious at the moment. So people are really planning their decisions a little bit faster, but they don't need to rush these decisions either, which is a nice change from last year.
There's basically three things there, aren't there? The year started off, there was a lot more caution there. And I think also just a huge amount of uncertainty. The central bank had kind of advised that there would be no interest rate hikes until 2024. And then suddenly we were getting hikes and they were coming quick and fast. And there was a lot of uncertainty about how high interest rates might go and how quickly. I think now, I mean, evidently we haven't reached the end of the tightening cycle, but at least people can see the approximate trajectory. And I guess there's some level of comfort there that eventually we're going to be coming down the other side. So I think there's just a little bit more certainty, and the big housing markets are searching for a base, but there's a little bit more confidence around. I think the other thing, as you said, is that people have been just planning ahead. I've definitely noticed an uptick in inquiry for people doing property strategy programs. We do a product called We Plan, and I think a lot of people have just been getting their affairs in order, getting their ducks in a row, as the saying goes, and I think just preparing to make a decision. But yeah, definitely been more caution around in general this year. Sydney is obviously the market that gets the bulk of the attention in terms of commentary, and I saw ANZ Bank looking at potential declines of more than 15% peak to trough now. I guess the Sydney market, it seems to me the market is overall probably still cooling. Last couple of weekends, maybe just a bit more buyer activity or a bit more confidence around. And we've seen plenty of examples of prices down 10 or 15% from the highs. Just looking at the market there, I can see there's some really good opportunities, I think, to buy established units, places like the North Shore, around the 700, 800K mark, because I guess what's going to happen in January is the stamp duty is going to be scrapped up to 1.5 million for new entrants of first home buyers into the market. And already rents are rising very rapidly in Sydney. I think asking rents are up about 20% over the year. So there's some sort of counter-cyclical or contrarian opportunities in Sydney, I think.
Yeah, absolutely. And look, we sort of picked this a few months ago. We sort of looked at the way this was going. So things that we were looking at in Sydney, it was a case of, right, we need to be prepared that some of the prices will go down. But, when you're talking a long-term investment, you need to think of it that way, as a long-term investment, as you know. And we could see that this was going to be the pressure coming back on the rental market, people coming back into the country. So, it was about playing one thing off the other. So if the prices came down, but yet your rental return's going to be very good. So, same scenario. You can buy a good investment. You can just really set and forget. Certainly found a bit of an uptick of recently. People, as we said about before, that caution's sort of going out the window a little bit now. There's more people that have been looking for principal places of residence in Sydney. Obviously, investing there in some cases does take a significant amount of money, so a lot of Sydney-siders go elsewhere. But certainly if you're looking for that more affordable thing, some of those apartments there are very good, particularly areas close to water, but also there might be local planning laws to say there's story heights or the amount of things that can actually go in, there's limited. So always liking those places where we're not going to see that oversupply of things like apartments and units.
No, you preempted what I was going to say. I think when it comes to the unit market, particularly in Sydney, which is the biggest or sort of most developed or advanced market where apartment living has become the norm, that we generally would advise people to look towards the sort of more boutique, well-established developments that have been there since the 60s or 70s. Not so keen on the big high-rise developments. There aren't so many being built in this cycle, but the returns have been pretty underwhelming from a lot of the new stock in recent years, partly due to overbuilding, as you say. So we generally look for landlocked areas that don't get overbuilt with big high-rise towers. And as a general rule of thumb, you want to look for something that looks a bit more like a home where somebody could live and less like a rental on the 30th story or something of that nature. I think that type of stock is often sold to investors, but tends to underwhelm. Just another thing I've seen just in recent weeks in Sydney, a lot of developers and builders, there's been a big spike in insolvencies, which is expected to continue. And I think a lot of people are finding it's either too hard or too risky to renovate. So there is a bit of competition around for well renovated and well presented family homes. And that, I guess, will continue. The cost of renovation and trades and materials has been very, very high. And those prices tend to be sticky. Now, Al, I've probably moved around the country more than almost anyone I know over the last 15, 20 years, but probably you more than me even. So you've seen a lot of parts of the country firsthand, and you're a Brisbane boy these days. Now, tell us what's happening in Brisbane, because I've just seen in the last few months that there's been something of a rotation of buyers into particularly townhouse and unit developments, and prices are suddenly on the move, certainly in suburbs like New Farm or Toowong or out your way at Indooroopilly. And maybe house prices have come off a bit in some cases. And I guess that could be driven by affordability, also potentially due to tax changes coming down the track, as we'll talk about later on. But what are you seeing in the unit market? It seems to be a lot tighter than it was 5 or 6 years ago, and not so many rental vacancies now.
No, absolutely. And the rentals are very tight, actually, and it looks like it's still going that way. So there's certainly a huge demand, particularly as you're in the city suburbs. Yeah, look, and I think just seeing the price rises we're seeing, within that sort of 7 to 10K radius of Brisbane CBD, certainly seen some very significant ones, up to around about 35% in some areas, which is big. And then it's sort of plateaued a bit. Unlike Melbourne, Sydney, we haven't sort of seen those large dips. Talking to local agents, they're still busy enough. It's definitely cooled down a bit. There's no doubt about that whatsoever. But yeah, that whole affordability thing. I mean, it's people want to be located, and I know, speaking with other people, even in my area, and people like myself who have recently moved up this way back from Echuca, getting a rental property here as well. So for me, it was more about that convenience, getting into the good school location, being near that train line. And that's really what people look for. And I think that particularly in some of these areas, and probably flip back to where you said about Sydney too, Pete, some of these older unit blocks, the apartments are bigger. You've got a bit more space around you as well. So it's looking quite attractive for people. Yeah, for sure.
While on the subject of Southeast Queensland, obviously, I think investors today are tending to take a 10-year view out to the Brisbane Olympics. But if you're looking at houses and you're looking for something of a more affordable nature or slightly lower budget. I guess there are still some opportunities outside the immediate BCC or Brisbane City Council area, places like Ipswich or the Gold Coast. Certainly extremely tight rental market down there. I guess you just need to be a little bit careful about what and where you buy and how much you pay at the moment, because there have been some increases and sharp increases in fact over the past couple of years, and rents have been on the rise. Are you still getting some inquiry for people looking at Southeast Queensland?
There are, Pete, and it's always a little bit confusing for people as well. I tend to find that most people wanting to invest in Brisbane at those affordable rates are probably not local. I tend to find that local Brisbaneites or people just generally from southeast Queensland that are going to invest, they probably have some knowledge of these suburbs and these different areas, and they probably don't think a lot of them. But what they don't actually see is that you get a lot of people investing or even moving up here from down south. And, they see these areas as being more affordable. And obviously, from that perspective, you get new money coming in, you get renovated homes, you get things like cafes popping up and that sort of thing. So, what we refer to as being gentrifying suburbs. So we are looking at that very closely. And we've seen that, particularly Moreton Bay. We've bought quite a lot of property up that way. And these are suburbs, certainly, that are seeing new money coming in, particularly the Bayside side of Moreton Bay as well. So it makes it very attractive. But you're right, it can change quite a lot between, sort of street by street in some cases. And really just, being smart about doing your due diligence and understanding, what makes an A-grade asset. So you can look in some of these areas and there's certainly some opportunity, but it is just that case of making sure you've ticked off every box of your due diligence checklist.
Yeah, that does make absolute sense. I'm heading down to Melbourne in a couple of weeks. I'll have a chat to a couple of agents that I know down there to get another sort of take on what's happening in the market. I guess a similar trend to what's been happening in Sydney to some degree. Still quite a lot of interest in Adelaide. I think the relative affordability of Adelaide has been the trump card, I think, over the past couple of years. We've even had people who are from South Australia decide to move back. Lots of interest from interstate investors as well as local buyers. Seems that there's a good deal of interest in some of those beachside suburbs around the 700k level, or sometimes even lower, for houses, places like Seaford and Moana, Port Noarlunga and so on. I guess there hasn't been, maybe the frenzy has calmed down a bit, but Adelaide hasn't really had a downturn as such in the same way as the big cities. Are you still getting any sort of inquiry or interest around what's happening in Adelaide?
Definitely, Pete, and it's somewhere that we do like to go. And when we actually do look at areas and so forth as well, it's a case of really weighing up three things. It's a sort of rental return people are going to get. It's the growth that we can foresee in that property, and also take into effect any sort of risk factors. So we like a good mix of all of those three things, and I think Adelaide really delivers that, particularly the beachside suburbs, as you say, just because it is that whole lifestyle factor. And we look at some of these gentrifying suburbs as well. You've got transport to the city, that it's a lot more commutable, and not everyone that lives in the big cities wants to move to the country. They like the facilities of the city. So take into account, if you're from Melbourne, for example, over 4 million people don't want to be stuck in traffic anymore. You might be working remotely. People looking for that lifestyle change, and Adelaide's very attractive. That the weather's that little bit better, the beaches are that little bit better. They play the right kind of football over there as well. So there's a lot to like about it, Pete. And I think that when we're looking at vacancy rates of around 1%, some cases even a little bit under, I think that's pretty telling to say that there's some safety purchasing in that market as well.
Yeah, my dad's favourite city in the world, I think, but then he's only ever there for the cricket, so he does get a bit of a jaundiced or slightly unrealistic view of what life is like. But interesting point you made there about the commutability, because there has been, for the past couple of years, the changing face of the CBDs. Interesting to see the figures out this week. The CBD vacancy rates, well, in Brisbane, they're back to below where they were pre-pandemic. Sydney and Melbourne have those empty units have filled back up, I think partly because they got much cheaper to rent. But there's certainly, I was chatting a couple of episodes ago to the futurist Steve Sammartino, and he said, look, there's going to be less demand for office space in the CBDs going forward because people don't need to be in the office 5 days a week. And we've got things like the international students are now coming back. But it does seem that there's more flexibility in the workforce, and then not everybody, therefore, need to be in some of those commutable areas. That having been said, Steve Sammartino did say that look, people will still tend to cluster around cities and transport hubs, but as much for the lifestyle and entertainment options as the employment choices going forward. But it seems to me that the roads have been especially busy in recent months, people tending to give public transport a miss. Is this having any impact on where and what people buy still?
Yeah, it is, Pete. It's been a little bit amazing actually watching changes that have happened through COVID. And in some cases they were happening anyway, but it really has sped up that process for a lot of people. People are now sort of weighing up, as we say, well, where are they actually going to live? A lot of it now is about lifestyle, affordability, of course, as well. And I think that we are now seeing more people getting pressured a little bit to get back into the office. I think some employers, speaking to people that I know, where they've been either hybrid or fully remote, are now getting more pressure on to come back in the office. It's a little bit of a fight out there, I think, at the moment. But those people that are, rest assured, they are working remotely or hybrid, certainly are making their lifestyle decisions based on that. Even look at regional Victoria, the amount of people now that live in Bendigo, and they'll commute to Melbourne once or twice a week on the train. They work down there. There's things happening down there like rail upgrades as well. So there's a lot sort of happening that way, I believe. And there's certainly a lot of people making that inquiry where they say, look, now we can move. Based on that, we are actually going to do that. And there's other changes as well with, just with the real estate industry in general. Things like the amount of things that have now gone online. You've got bidding systems. You don't get as many auctions out there on a Saturday anymore. So there's been a lot of changes. I think a lot of them are going to be here to stay. And I think certainly down that line that that office space in the city it's certainly not as applicable as it used to be.
Do you want to save on buyer's agent fees? You could save thousands with Buyers Buyers. As Australia's most extensive network of buyer's agents, we can lock in highly competitive prices. Plus, our national network of buyer's agents are some of the best in the business. So get the Buyers Buyers advantage and talk to us today. Call 1-800-975-051 or visit buyersbuyers.com.au.
Now, Al, one of the reasons that people like to get you on the phone and get some first-hand advice is speaking to somebody who's across all the latest trends and changes. Now, one of the things that it has been changing, and well, I guess is an ever-changing environment, is some of the policies that go into influencing the housing market. We already mentioned the scrapping of stamp duty for first-time buyers in New South Wales, and Labor's Party has its Help to Buy scheme. So there are things like that. A big one at the moment that might just be worth spending 5 minutes on is potential changes to the way in which land tax is levied for people who own investment properties in Queensland. And I think particularly of note to people who are portfolio investors. So if you're an investor who owns a property in Queensland, but then also in other states, potentially going forward, there's going to be some significant changes there whereby, and this, I guess, goes against the principles of taxation as I understand them, but the Queensland government is proposing to tax investors on the land value across the whole portfolio, so including the assets in other states and other jurisdictions. Look, I guess this is quite a surprise move, and it will no doubt get a huge backlash. Already have a rental crisis in southeast Queensland, Gold Coast, Sunshine Coast, parts of Brisbane, and this isn't going to help. But looking forward, Al, what is that doing to people who are in the market? Are they considering a restructure? And for people looking to invest in the future, is this something that people are questioning and starting to factor in?
Yeah, they definitely are, Pete. It's been raised with me several times. So when we are exploring, we're very diligent on the areas that we choose. Obviously put a lot of study into things as well. And something as broad as this then obviously has to be a deciding factor in it, particularly for investors that have already got multiple properties as well. It's it's a little bit of a question mark as to how that's going to affect them over time. And I think a lot of investors are feeling a little bit robbed at the moment with quite a few of these different policy changes. And with, a lot of people coming into the investment market sort of feel that, well, they're going to be on the end of these policies and it will affect them all for sure. But no, so definitely having a lot of those conversations, Pete. And I think there is cause to be cautious in that matter. Yeah, really look at it. So I think is that overall picture for sure.
Yeah, and actually other changes as well to things like tenancy acts. And a lot of these changes seem to be adverse changes for people with rental properties or looking to invest in rental properties. I think this is where the idea of having a property strategy really comes into its own, hence our We Plan products, where we just try to map out a strategy for people going forward so they can work out the most efficient way to invest. Another change is Victoria's windfall tax. I think this is something that would impact developers more, or people who are sitting on properties that are rezoned, and that value uplift as a result of the rezoning could be taxed at very rapacious levels. Again, there's likely to be some kickback or pushback against this. I just can't see this helping at a time when we're already at 1% rental vacancy rates nationally, and immigration is now starting to rise. The students are coming back. We're getting 10,000 applications a month now for international student visas. And I noticed in the July figures, the provisional estimate, that we had 1.1 million arrivals. Well, it's only a few months ago that number was under 100K. So there's been a huge rebound in the number of arrivals. I think at the moment, we're not seeing the full force of it because so many Aussies have taken the school holidays or other opportunities to get over to Europe. Now the borders have opened, but typically it's those busy summer months that are a worry for the rental markets, especially when the students are around as well. So I guess tight rental markets are going to be a feature over the next couple of years. We mentioned a lot of construction companies going to the wall. So Al, tell us a bit about We Plan and what you do there with clients in terms of planning or making a 10-year property plan.
Yeah, no worries, Pete. Look, it's as we sort of said at the moment, there's a little bit more room to do your due diligence in this market. Things are moving a little bit slower, but that really makes it more and more important to actually take the time to study, well, what is our plan? What is our strategy? It's similar to if somebody's going to bid at auction, for example. Unless you've got a strategy, you're really going a little bit blind. I speak to a lot of people that, just given the amount of information that's out there at the moment, a lot of people with that analysis paralysis, it's very hard for them to take in. So really from our side, what we try to do, particularly with We Plan, is make it very simple, put it on the table to map out, look, here's the goals, here's the journey you can take. I speak to people, Pete, that might have bought 3 apartments in Brisbane 12 years ago now. What they've done is a lot of cases have either not moved or done very little. And particularly if you had have bought a house in those sort of same areas, then you would have done far better. So it's about really avoiding those sorts of traps as well. And it just answers a lot of the questions. There's a series of consultations that go through with We Plan, and ultimately you end up with a really great 10-year property strategy. Just takes a lot of the questions out of it. And helps you work towards some goals, Pete.
Absolutely. And I guess what we've had over the past few months is a lot of people asking, well, what's going to happen to interest rates, and what mortgage rate will I be paying in 6 or 12 months' time? Well, look, what the pandemic should have taught people, not sure the lesson always sinks in, is that predicting things in the future, I mean, a lot can change very quickly. I mean, just look at those arrivals numbers into the country. We went from above 2 million in July a few years ago to 87,000 July last year, and now back to 1 million. Nobody in their right mind would have put out a forecast a few years ago predicting that, and yet that's exactly what's happened. But look, I guess projecting those trends forward, we should start to see immigration ramp up. There's a lot of debate on this at the moment between business and the new government, but it does look like we're going to have a record immigration intake. The temporary visa holders as well. We saw a 600,000 drop in the pandemic. Well, they're starting to come back as well. So, I mean, it's quite clear that the demand for rental housing in particular is going to be enormous over the next few years, at a time when construction companies are really struggling, highest insolvencies we've seen in years, probably 7 years or so. And that's only going to get worse as a lot of those projects were commenced on fixed prices. But interest rates, look, it's very hard to predict. The best thing you can do in my book is just look at what financial markets are pricing, because there's no bias in that commentary. That is, I guess, the weighted average of views out there. It looks to me like in September we might get another 40 basis points of tightening, but a lot of the data is pointing towards, well, definitely the return of more immigrants, which should take some of the pressure off the labour force capacity. the wages and earnings figures haven't spiraled as a lot of people feared. I just sense that generally people, they can see that there's going to be some more tightening, but it's not going to be the wild ride that people were fearing even just a couple of months ago. I guess you've even seen gas prices coming down up your way in Brisbane, probably by about 50 cents. And all of those things just help to give people a bit more peace of mind. So I guess to wrap up, Al, somewhat different trends around the market, some opportunities in Sydney. I think North Shore might be worth a look. Still some interest in Adelaide, Southeast Queensland, obviously. But generally, it seems to be it's been a more cautious year this year. And I was chatting to Ben Kingsley, the chair of PICA, only yesterday. And their general view is that I think confidence will really start to come back when interest rates stop going up, which could be a few months away yet.
Yeah, absolutely. And it's going to be very interesting. I mean, really state by state how it actually moves forward, particularly with things. We mentioned the windfall tax there before as well. You know, personally knowing a lot of people that have been sitting on land in Victoria for some time that are now obviously having to make a move saying, well, you know, we better do it now. Otherwise, it might deter people from selling or developing that land over a longer period of time if that's the case. So short term, it may help to bring some supply onto the market. Longer term, well, that's yet to be determined, and ultimately, obviously, buyers are going to face that cost. So, yeah, good time to do that due diligence, Pete. Make sure that you've got a strategy around it, that you've got some good help on your side as well.
Yeah, sounds good. And if people want to check out your week plan offering, or if they want to make an inquiry about where and what to buy, where should they go for more?
Buyersbuyers.com.au, contact us page there, Pete. They can jump on there, fill in the details, and that will come straight through to me. And happy to have an initial chat with anyone just to help fill in some gaps and have a chat about our services as well.
Thanks, Al. Well, I'll check in with you in a month or two. I think we've actually got a webinar coming up in a month's time, so we'll definitely put out some details in the show notes or in our newsletter going forward. You can subscribe for our weekly newsletter as well at the website there, buyersbuyers.com.au. Thanks, Al. Look forward to chatting to you again in due course.
Thanks, Pete, and thank you, everyone. Cheers.
Thanks for listening to Pete's Property Podcast, powered by Buyers Buyers. Don't forget to subscribe and join us next time as Pete chats all things property with a new guest. And just a reminder that the information provided in this podcast is general advice only and doesn't take into account your personal financial situation or needs. You should always consult a licensed professional to discuss your individual personal circumstances.